beyond market headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Anthropic's business, its run rate revenue within India has doubled over the last 4 months.
There is an event later today in Mumbai near the gateway of India, and I think we'll hear from both leaders then.
The Commerce Ministry indicated that a deadline cannot be ascribed to the same.
Absolutely flat, slightly sideways, about 0.25% down, I think. Yeah, 26,615.
Probably most of the positive and the news flow around the orders are already priced in.
So far, the stock is down more than 20%. It's at a record low.
Whole lot of content, a whole lot of conversations to unpack here from the AI Impact Summit.
I think it's a question between near-term and long-term. It's a question between value and the kind of valuation and the kind of growth rate.
Code will not be the goal. It'll be actually making AI work, orchestration, and those kind of things.
What we see from our clients is that our clients trust Infosys in driving and delivering AI work.
Our sovereign models are proving to be better than many of the global best.
See, there is a huge legacy install base. Modernization of this is again a big opportunity.
And the Nifty holding above that 25,700 mark. It's at about 25,750 as we speak.
Well, that was the day so far. Hello and welcome to Closing Bell. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel. With me is Reema. And Reema has had a very, very busy day, keeping a track on what's going on the AI front. And as we speak, Reema, 60 minutes to go. We have the weekly expiry as well. The Nifty is unmoved. We're as flat as can be. But intraday, there's been plenty of volatility. I think the good news still today is that the number of stocks advancing are way more than the number of stocks declining. So your portfolio must be feeling far better.
Well, IT is done an intraday jig, right? The Nifty IT index moved up between 11 and 12. You started seeing it move up. At the session high, the index was up nearly close to about 2.5%, 3%, but it's come off in the last 1.5 hour or so. So basically, it was a very hectic day in terms of tech conversations. First at the India AI Summit, Cisco, HCL Tech, and then the Infosys AI Summit. The key takeaway is that there is no dearth of opportunity. There is a dearth of opportunity, particularly in data modernization, right? Companies are sitting on old legacy systems. If you want to use AI on it, first you have to modernize that data.
Correct.
Get it up to speed, and then we will be able to apply AI on it and get the output. So that shift itself is a very big work. So there is a lot of opportunity. But as Nandan was saying, it's on execution now. There are new avenues, new categories of growth, but it's onto the Indian IT companies now to execute. So the proof is really going to be in the growth. Once you start seeing the growth metrics, that's when you will come to know how Indian IT companies are faring in the AI world. We'll talk more about it. For now, let's just do a quick check on some of the big movers. At the index level, as he said, it's absolutely flat on the way up. Infosys holding up with a gain of about 2%, but it's come off a tad bit from the highs. Adani Enterprises is your top gainer, 2.5% higher. BEL continues to do well since morning. It's been one of the big movers. L&T has been strong. The investors are hoping for a special dividend after the sale of Nabha Power to Torrent Power. So that's keeping the stock excited. You've got a Titan, you've got a ITC, you've got a Bajaj Auto, Tata Motors Passenger Vehicles. Some of these stocks holding up in the green. On the way down, metals is struggling a bit. In fact, the Nifty Metal Index is the top sectoral loser today. So under pressure are Hindalco, Tata Steel, Hindalco 2.3, lower Tata Steel slipping by 1.5%. Eternal is weak in trade. Eternal has been one day up, one day down for the last couple of days. Very, very volatile. Shriram Finance, weak in trade. Reliance Industries is the heavyweight, dragging its feet. And ICICI Bank too, down under pressure. Let's also tell you what we've lined up on the show today. Tempered gains across the indices. The Nifty perched above, just below actually, the 25,700 mark. There is increased interest in the small caps, PSU, IT. They're lending support while metals are on the back foot. Now, IT sector is still holding up in the green. Infosys is leading the way after locking in a partnership with Anthropic to deliver enterprise AI. Nandan Nilekani also allays concerns, saying Indian companies are not missing out on the AI opportunity. Interesting excerpts from our chat with the management of HCL Tech straight from the ongoing AI summit in Delhi. MD C. Vijay Kumar of HCL Tech also says he expects deflation to be 2 to 3% on account of AI, but that's already modeled into the prices. Ola Electric cracks but comes off the day's low. This is after brokerages continue to downgrade the stock after a weak showing in Q3. So lots lined up. It's an action-packed 1 hour, but let's begin with the trading ideas.
Well, that's right. How do you position yourself then for the final hour of trade? Mitesh Thakur is back with us. Hi, Mitesh. Pretty much flattish day is what we are seeing on the Nifty. The Nifty Bank, though, that's the one that's doing well. And the Nifty IT index seems to be getting into some kind of rhythm. Your view on the Nifty, what are the levels you're looking at? And fill us in with your picks.
Good afternoon, Nigel. I think in the morning I was saying that 25,750 thereabouts is the level which the Nifty needs to get past, and we've got a high of around 25,764. I think closing about 25,750 would be important. Else we are broadly doing a range of 25,400 to about 25,750. You're right, the bank is doing well, and in fact, long positions on PSU banks particularly can be taken, and I recommend the Bank of Baroda, which is a buy with a stop at about 297.5 for targets of roughly around 315. And the other stock which I like is Bajaj Finance. It's had a good rally. Then yesterday and today it looks like giving a pullback. So giving you a fresh entry point. Keep a stop at about 994 for targets of around 1040.
Those are some trading ideas, but just to get you up to speed with the AI IT developments that we've had overnight. And the big one, of course, was the Infosys AI Investor Day that started at close to about 11 o'clock. So just in case you missed listening in to the keynote address by Nandan Nilekani, who spoke about how this time AI is different, the disruption. And two, there was also a services opportunity discussion by the CEO, Salil Parekh. So these were the two main tracks that everyone was watching out for. And these are some of the key takeaways. One, I think in a way, Nandan Nilekani has reassured investors. It's not that the Indian IT companies are missing out on the AI opportunity. It's not that just the LLMs, these big tech companies would be the AI winners. So his words were, there is no opportunity gap. The opportunity is bigger than ever before. The risk is not in the opportunity, but in terms of the execution. So that was one big fear, that Indian IT companies would be AI losers, but in a way he's dispelling it by saying that there is AI opportunity. The second risk that people had in mind when it came to Indian IT companies was a risk of revenue deflation. If your productivity gains are so high because of AI, you can do the job in half the time. You can do it with half the engineers, right? So the overall value of the project would come down, and therefore IT companies will lose revenues. This is the risk in the market.
Yes.
So what Nandan Nilekani said is that there is a big difference between tech, where the pace of tech today in terms of tech evolution and enterprise adoption. He's saying it's easy to adopt technology and show high productivity gains for a particular task, which is what you see. You can do it, when an LLM showcases its ability, it's for a particular task. And there you can see very high productivity gains. But when you have to get those productivity gains at an enterprise level, it's very, very complex, right? So scaling AI at an enterprise level is not that easy. So there is that big difference in terms of if you are fearing that revenue deflation is going to be very high, 15%, 10%, it's not that easy, because to get those productivity gains at an enterprise level,
it's going to be very difficult.
It's going to be very difficult.
For a task, it's okay.
Yeah. And also, I think for the first time, Infosys has quantified the opportunity because of AI. The AI services opportunity is $300 to $400 billion by 2030. But as Nandan said, it's all about the execution. But the company has identified 6 emerging AI pools to tap into the opportunity. Some of the ones we know, for instance, AI for legacy modernization, AI for data, but also about AI for physical devices. Physical AI is becoming a big thing where you embed software in hardware companies, in devices, and get them to do work. Trust, of course. And then we had partnerships. Infosys announced that partnership with Anthropic, where basically they will be using Anthropic and taking Anthropic services along with their own AI offering and using it for all the enterprises that they operate with. So it's just a step forward, and they're moving in step with the way AI is evolving. So I think these were some of the key takeaways. It's allayed some fear in the market, which is why you are seeing a rebound in the share price. Share price has also had a one-way fall, so that is helping in the uptake today. But it's all about execution from here on, not in terms of the opportunity. We also had a chance to catch up with C. Vijay Kumar, MD of HCL Tech from the India AI Summit. He had a chat with Shireen Bhan, and there he spoke about the fear of revenue deflation on account of AI productivity. Listen in to what he had to say.
We believe there will be 2 to 3% deflation at an overall level because of AI. And this is something we've modeled. But there are at least 5 mega opportunities that we are chasing, right? AI factory, it's $1 trillion capex will mean at least $100 billion of services spent, and at least a couple of $1 billion we should be able to get from that. Physical AI is again another big opportunity. The whole agentic implementation. See, there is a huge legacy install base. We had called out about $600 million annualized revenues, advanced AI, and once again, this is different from regular AI revenue a lot of companies are talking about.
Meanwhile, Infosys earlier today also announced a collaboration with Anthropic to unlock AI value across complex and regulated industries. Listen in to what he had to say, Infosys had to say about the AI opportunity.
There is no opportunity gap. If anything, the opportunity is bigger than ever before. So don't get distracted by that. You should still ask the question, what is the firm doing to take advantage of this? What is the firm doing to transform its talent for this new world? What is the firm doing to design the services and products for this new world? What are they doing to tell the customer in a way that it resonates? What are they doing to make sure that the front-end conversations with clients are done properly? These are all the issues, and I'm sure everybody will not execute the same way. So there is an execution risk in doing that. So it is not an opportunity risk, it's an execution risk.
The legacy modernization piece, this is a massive, large opportunity that we are seeing. In addition to customer service, one of the largest opportunities, where we are essentially taking large legacy organizations. We'll actually share a couple of examples of this, of the work we're doing at scale, and bringing them away from the legacy landscape into the modern landscape. Physical AI is something quite new, where AI software is embedded into devices, and that is becoming a growth area because everything will have AI built into it. And then AI trust, which is both about the trust and cyber, but it's also about responsible AI, which is something where Infosys is leading in making sure that things are built with a view to keep responsibility in mind in the scaling of IT systems. There's a huge opportunity. The one that I mentioned, the 6 areas with an external analysis, we understand that the opportunity is between $300 and $400 billion in the year getting to 2030. So over that time frame, at that time in 2030. At the same time, we have several entities have made estimates. We have our own views. The AI productivity leads to compression in IT services. However, today we have a clear view that the opportunity is massive and large, and that will become the driving force of what we will grow and drive through in the next coming years.
Well, that is Salil Parekh saying that yes, there could be some revenue deflation, but the opportunity on account of AI is so much more. Dharmesh Kant, head of research at Chola Securities, now joined in. Dharmesh, we know your view on IT, and we know the stock that you like is Orion Pro, but keep that aside. Tell us purely about Infosys and what you heard from Nandan Nilekani and Salil Parekh. What were your key takeaways about the way IT industry will need to adapt to capture this AI opportunity?
Yeah, good afternoon, Rima. Thanks for having me for the show. At least now there is a lifeline and there is some sentimental, positive sentiments are prevailing after this announcement. And this was much needed. I mean, there are 2, 3 things. One is acceptance of the fact that in order to service AI-based, clients, you need to partner with AI partners overseas. So that capability has to be outsourced, and that it can be only through collaboration. Second was disruption is there, and it's quickly, disruption is going at a very fast pace. So today, this is a disruption. 1 year down the line, it can be another disruption, which will be again, hurting you. Third fact is, since you're collaborating, your revenue share, the entire model of revenue share will change. So there will be some, compromise out there. And at the same time, your expense sheet will also change. I mean, machines will be there, which will be largely doing the work than the humans. So that advantage will be there. But to my mind, that arbitrage between revenue, change to expense change will be in favor of, revenue less and expenses more. So eventually it will be a margin dilutive. Look at when we started, these companies used to command an operating margin of 35 to 40%, which has come down to 20 to 21% for large caps, and we are struggling there. This, I think, over a period of time will go down further. It will come to 15, 16% kind of an operating margin, 2-3 years, if everything goes as per the saying. So, and the gap which would have been created because of loss of business of existing SaaS platform, that can be definitely will filled with this AI-led platform. So net, it's a zero-sum game. I think a few days, couple of months, the sentiment may prevail. We may have a trading rally, but much needs to be seen 1 year, 2 year down the line, which I think is not so positive for Indian IT industry, seeing the way these developments are happening.
Got it. Okay. All right. Got that, Dharmesh. Let's focus on the two-wheeler space then. I know you're not too interested in Ola, but let's Sudarshan join in and run us through that news piece first, and then we'll get Dharmesh's pick from the two-wheeler space. Not electric at all, Sudarshan. I thought you'll go for it again today. The bike is not kickstarting only.
On the earnings front also, it's looking the same because for the last 2 quarters, company has been reporting a weak set of earnings. Recently, it has announced Q3 FY26 earnings where revenue is halved, losses remain elevated. Now stock is at a 52-week low. Today also, after falling 7% yesterday, today also stock is down. And now, if you talk about in the 2026 so far, stock has fallen almost 20%. Even on the volume front, it's been seeing huge volumes. Yesterday's volume was 8.5 crore versus 10-day average of 3.86 crore. And on the back of weak earnings, there have been few brokerage downgrades. Today, Citi has downgraded the stock to sell from buy and reduced target price to rupees 27 per share from the earlier target price of 55 rupees per share. What does Citi say? It's saying EV penetration in Indian two-wheeler market has been sluggish, and especially Ola Electric has lost market share. In January 2026, its market share has fallen to less than 6% from the level of 25% that company used to hold in the early 2025. But Citi believes management's efforts to improve product and service quality could take some time to fructify, but healthy gross margin trends and better operating leverage could boost EBITDA. It has cut estimates multiple to 3.5 times from the earlier level of 4.5 times. Now, in the start of FY26, company had given the guidance for the entire fiscal. On the auto business margin front, it was expecting to improve to more than 5% or to be at least 5%. As of December 2025, it's at minus 6.4%. On the gross margin front, it was targeting in the range of 35 to 40%. Currently, it's at 29.6%. On the volume front, it was expecting in the range of 3.25 to 3.75 lakh units. As of December, it has done just 1.5 lakh units. On the revenue front, for FY26, it was expecting in the range of 4,200 to 4,700 crore. As of December, it has done just rupees 2,000 crore. So it's reflecting on the earnings, it's reflecting on the stock price, and that's the reason it has moved to 52-week low.
Got it. Okay, all right, Sud. Appreciate you joining in and giving us a quick update. Dharmesh, what's your view on the auto space? Ola, I don't think you want to comment on it. You already gave us your opinion a couple of days ago. But I think in the past, Hero MotoCorp, that was the one that worked well. Hero or Bajaj, one of the two you liked. What's your preference now in the two-wheeler space?
Yeah, Dr. Nigel. Yes, Hero was the better liking as compared to Bajaj in the past, and it has worked well. Going by the numbers, even January numbers were quite encouraging, and we are entering into again a marriage season. So Q4 and Q1 is always good for automobile industry. So that traction is happening. Whatever dealer checks we have been interacting, the sales are happening on the ground. So the run rate of January is likely to be maintained in Feb and March going forward. So Overall, a positive sense we are getting from the two-wheeler space. The entire tailwind of direct tax cut, indirect tax cut, and the interstate cut is playing out there. Prices have moved up. They are trading at a multi-year high valuation multiple. But I think this is likely to sustain for next couple of quarters. The one best part has been they've been able to take the price hikes and pass on the input costs, so the margins won't be affected in Q4 as well. So there again, the topic remains the same. I mean, the Hero MotoCorp remains a topic, followed by Bajaj because their domestic sales are picking up, and January sales was quite encouraging. And if they are able to maintain that, coupled with currency tailwind of overseas sale, that should see it through. So I mean, 7 to 10% kind of an upside from here, from a trading perspective.
Okay, all right. Dharmesh, I wanted to ask you about the stock DCX Systems. It's been a rank underperformer. The results look quite disappointing. A couple of days ago, the stock was at around, I think, 150 or 155. In the last 1 week, it's now up close to around 5%. It's one of the outperformers, 185 rupees, though a far cry away from the highs. What's going on here? I think in the past you had a view on this.
Yeah. I mean, we even had an IC on this, and we booked out when the target price was achieved. But we continue to like the counter. The reasons being the order book is very strong. They're still sitting on 2,500 crores plus of an order book as of now, which has to be executed. And the drag on the profitability for last 2-3 quarters was on the consolidated level. Standalone, they were still managing to pull things out. And that drag was primarily because of their NIAT subsidiary, which is an object detection system to be developed for railway and locomotives. There some testings were happening. Then the last one was the winter fog testing, which they have successfully done. So going forward from Q4, our expectation is the expenses which they were booking for development of this product will not be there. That has been done. So whatever profit is there will translate into the actual operating profit and the PAT level, and execution should pick up. Though I have not interacted with the management post the earnings announcement, but looking at the overall size of the order book they are sitting on, and this overhang of NIAT will not be there from Q4 onwards. If execution picks up, then I think it's a deep value buy. But again, one has to take his own reasoned call when they are entering into this company. Just seeing with the order book, I think if things pick up, then the stock prices can really fire up.
Dharmesh, wanted to get your view on SRF, where a promoter stake sale is likely. Sudarshan, what are the details that you have?
This is a surprise announcement that has come from SRF's promoter, that is Kama Holdings, which holds stake around 50.2% as of December 2025. Last time Kama Holdings had sold stake was in March 2024, and that was just mere 6.75 lakh. But now, this time, Kama Holdings is looking to sell up to 3% stake, and that may happen up to March 2027. So till March 2027, Kama Holdings can sell anytime 3% stake, and this is a surprise announcement that has come, and because of that there is sharp falling. Looking at the SRF price, currently down more than 3%, while in the contrary Kama Holdings stock is higher.
Well, that's right. Thanks a lot, Sud, for that. Kama Holdings around 8,600 crores of market cap, and if they sell this 3% at current market price, well, they'll be getting close to around 2,500 crores. So that's why, in fact, SRF down, the one that's selling and will get the money is Kama Holdings. On SRF, it's a bit of an overhang. Dharmesh, interesting answer on DCX. It was a defense play, but now the railway, thing seems to be driving the stock as per what you said, NIAT. But what about this one, SRF? Stock is down. Out of nowhere, this announcement came at around 1 p.m. Explains why SRF is down. Your view?
Yeah, definitely. It's a surprise announcement, and because of that reaction, we are seeing the stock price. I mean, it's always prudent to come out with explanation as to why the stake sale is happening and what would be the end use of that money, which is through the stake sale. If that is there, then this uncertainty and lack of clarity is, not there, and then investors can also take a reasoned call. So usually, I mean, in investing parlance, whenever promoter is selling stake, unannounced is not taken, lightly or positively by the investors. So I think that knee-jerk reaction is happening. Otherwise, the numbers were quite encouraging for SRF for last 2 quarters. So nothing wrong on the business front. Things were shaping up well. However, the management has guided because of the China raw material input and the competition out there. They were facing some challenges. but on number front, they have been able to deliver. So, I mean, as far as, corporate governance at Prudence is concerned, it's always, safe and nice to come out with the outlay as well and the objective of the sale.
Okay, thank you very much, Dharmesh, for joining in. We will slip into a break. On the other side, Aman Chauhan, fund manager at Abacus Asset Managers, will join in. Stay tuned.
Welcome back, where it appears that we're going to have a bit of a day of a consolidation on weekly expiry. In the next 60 minutes, the contract will expire. Now, what's clear today is that the day's high, ballpark around 25,765. That's the intraday high. That's where the Nifty resistance is, just for today's trading session. Tracking the Nifty PCR, well, that had gone down to 0.64. It started the day at around 1.1, currently holding it around 1.05. So no big move on that one. The calls, they're getting written. 25,700 call. The premium right now is down to around 13 rupees. Remember, it started the day at around 73 rupees. So the time value of money is getting eroded, and that explains why the premium has come down. On the flip side, even the 25,650 put, out there as well, there is writing, and that's why we have seen that the premium has come down from around 60 rupees to around a buck or thereabouts. And it's that out there as well, you're seeing erosion in terms of the premium. So for the time being, it appears we're going to be expiring in this particular vicinity of ballpark around 25,630 to the upside around 25,770, which incidentally is the high point of the day. Stocks are in focus. ITC, a beaten down name, there is fresh buying, both in futures as well as in the cash market. So there is some buying that we're seeing on that one. Adani Enterprises has been a stock that actually corrected from the top. Now that's coming for a bit of a short squeeze that we're seeing. And Union Bank is the other name that's seeing some kind of fresh addition in today's trade. Infosys, for the timing, there appears there is some fresh buying out there, but there are still a lot of shorts in the system. If in case it can find its momentum, those shorts will have to run for cover. For the time being, we're seeing some element of fresh buying on that counter. So it appears like we're going to be getting through the day, a day of consolidation with a very mild positive bias, Rima.
Okay, Aman Chauhan of Abacus Asset Managers is now joining in on the show. Aman, thank you very much for joining in. I know we've asked you in the past about technology, but that's clearly the hot topic right now. And we're hearing from IT companies, whether it's CVK of HCL Tech or even Nandan Nilekani and Salil Parekh of Infosys. What's the read on the Indian IT companies in terms of what the expected growth is going to be over the medium term? Not just FY27, which will be better, but say over the next 3 to 5 years. And if you juxtapose that with the kind of valuations they're trading at?
The growth rates, I believe, right now within low single digit, which can go to mid single or slightly higher than that. Very difficult to gauge in the near term whether they'll go to double digit. From that perspective, companies are fairly priced. It's not as they're not expensive, definitely, but it's not that something is like a screaming buy, because you can buy for a tactical trade. Stocks have corrected 30% in the last 2 weeks and they can bounce back, give you 5-10% here and there. But for an investor looking to hold on, I believe a mid-cap IT would make much more sense than getting into a large-cap IT where the growth rates can be double-digit, because then you can still justify 15 or 18 or 20, 22 P. So that's where it is. So if you are benchmarked, you don't have a choice. You need to own Infy, TCS, or HCL Tech, or whichever names are there in the index. But if not, then still, I believe mid-cap IT can make you a better return than holding on to the large cap. That's broadly what we are feeling.
Got it. Okay, all right. Hi, Aman. Good to see you. And as always, mid-cap IT could potentially do better than large-cap IT. We just got done with this Q3 earnings. And, most estimates and most of the reports that we have read with regard to earnings actually has been a little better than what most analysts were predicting, particularly from the broader markets. What do you think from your on? Earnings will get better, and that could be the reason that the broader markets actually outperform the headline index. As we have been seeing in the last 1 year, the headline index was pretty okay, but individual stocks got smashed out of shape, 10, 20, 30, 40, 50% down as well. So do you think we're bracing for that sort of a year when mid and small caps do better?
I think so, because this quarter also, the reported numbers, the mid and small cap have delivered a higher growth than what the top 50 or top 100 names would have, right? And hence you can justify a better multiple for these companies because of the higher growth, which right now nobody is looking at it because sentiments are weak. But broadly expect 4Q to be better than 3Q. So once that momentum starts to build in, expect FI money also to start to coming in, market starts to do well, and that is the time when investor interest will be back into these names, right? So I believe there's enough liquidity in the market. Domestic liquidity is there. People are just waiting for the right sentiment. It's like when you start making money is when you want to start to look at these names. Otherwise, everybody has something or other already in the portfolio and you don't want to add a new name. So hopefully in the next 2-3 months, when market starts to see good activity, and that's the time I think the mid and small cap can start to outperform. That's broadly what we feel.
What are you all buying right now, Aman? What is of interest to you all?
So we are adding more of metals. We are adding more on the pharma. We are also looking at adding into the capital goods and the engineering space, because this is one sector where exports can resume both to US as well as to EU. So textile is an obvious name, but there's not much of liquid names in that sector per se, so not much of exposure there. But cap goods can clearly come in. Selectively, chemicals can also do well, because that's also something that got impacted because of the tariff, which can go away. So these would be the sectoral preferences as of now.
I wonder whether someday Abacus as well will come and we'll see Sunil ringing the bell. See a listing from your stable. So we'll have to, wait by to see something on that front. But what about the other capital market plays that we have? Yesterday a stock like Angel One was down 8-9%. It ended the day with a cut of only around 4%. BSE has gone through, a bit of a correction from the recent peak. Because of the regulatory changes that are coming there, the prop trading in the F&O as well will get squeezed a little bit. And we know the SGT is going to go up. Your view on this space, because the runway is immense. Market participation is just going to go up from here on, and penetration is going to go up. Would you be a buyer in select capital market plays? And I know you won't get stock specific, but you could at least give us a bit of a direction. Wealth managers, exchanges, brokers, what do you like?
So we don't have much of brokers in our portfolio. We do have AMC companies, we do have wealth management companies, we do have a diversified place which is into all of these businesses also. So we like the space. We had decently exposed. Will I buy more right away? Not really, because already exposed in that sense. But yeah, we don't have pure play brokers. That is not a space that we are very excited about, because it's hyper competitive and there's not much of, you can say, more that you can generate. But if you're an AMC, if you are a wealth guy, you already have a captive client base, that is something which is more interesting than just getting into a pure play broking.
Okay, all right. Got that. Aman, what about the auto pack? What's your view of the, a lesser covered name and a management that doesn't talk too much to sell side, as well as Force Motors? Stock has gone from strength to strength. I mean, a year ago, I think it was 9,000 rupees. Today, it's 25,000 rupees. What do you like from that play, the auto pack? Will it be the core auto OEMs, if you could drill it down a little bit for us? Or do you all prefer the, auto ancillary names, or maybe the financiers? Your take?
We have auto anchor in our portfolio. That's what our preference is between the three sub-segments that you mentioned. Auto financiers are also good, but most of them trade at valuations which is higher than the peer group, and hence we have not got directly into them. So auto anchor is something where clearly our interest is. OEMs are looking interesting. Right now, not much of exposure in our portfolio. We are select one or two names, but I think maybe in the next 2-3 months, we'll have to get into more of these direct names also. So out of the three, ANGs first, OEM second, and then the financials.
Got it. Okay, all right. One quick word. The alco beverage companies, they have seen a sharp correction from the top. Duties went up. Select reports suggest that, there is some inventory pile-up globally. But otherwise, in India at least, the consumption may not go up, but maybe the quality consumption could move up. How are you all placed out there on the alco beverage space? At one point in time, it was fancied. Then the stocks have taken a sharp knock.
Yeah. So we feel consumption will go up at the top also and at the bottom also. So we are not worried for that front, nor are we worried on the global inventory levels. I believe in the near term, what has happened is there have been payment delays, especially in the southern states, which are a large market for many of the players, right? And because of that, working capital got stressed, and that has led to some, you can say, profit booking, or you can say less interest in this segment. But I'm sure once that reverses, things should be back on track. It's a decent high double-digit kind of growth segment, which we expect can continue. So I'm not too worried on that. We own some names in this sector, have a positive view, continue to own them. And maybe we'll add once we get clarity about this payment situation in the southern states. That is, I think, what is bothering the market in the near term.
The ones with exposure in southern states, I think, would be Allied Blenders or Tilak Nagar Industries, one of the two. Is that ballpark? Couple of stocks?
All of them. All the pan-India players, they all have southern exposure because that's the largest. Whiskey is the largest market in India. Southern states are the largest consumers of whiskey. So anybody who's a pan-India player has some southern state exposure. Almost all of them.
Got it. We'll have to keep an eye out on that, and we'll quiz the managements as well whenever they do join in with regard to payments and how that working capital cycle is getting stretched. Thanks, Aman, for joining in, giving us some color. You're sounding far more optimistic, I think, on the market, so that's good to hear. Time to slip into a short break. Come back. We'll get you some technical calls, some buy and sell calls. Stay with us.
Welcome back. We've got about a little more than 15 minutes to go to wrap up trade. Mitesh is back with us for a few BTST calls. Mitesh?
Yeah. So I think, the market has come up, but what is looking interesting to me is the FMCG pack. Britannia, for me, I think, I'll take that as a BTST call. Britannia, keep a stop at about 61.24. Look for target of around 61.8. And Colgate is another one, Colgate, so BTST with a stop at 21.38 for targets of 21.75.
Okay, got that, Mitesh. A couple of Tata Group stocks actually are doing well. Tata Motors, pull up the intraday chart. Titan is the other stock I think we should pull up the intraday chart out there. Both of them have seen a bit of an up move, and Dr. Reddy's as well. That as well has moved up a little bit. So explains why now the markets are up close on 45 points. Let's talk about some stocks that are on the news. Ria joins in to tell us exactly about that. Ria?
Well, let's start off with Cochin Shipyard first. They have been declared as the L1 bidder for the construction of 5 next-gen survey vessels for the Indian Navy. The total order value is rupees 5,000 crores, and at the end of Q1 of FY26, the company's order book stood at roughly rupees 21,100 crores. Texmaco Rail has also been in focus today. They have received an order worth roughly 220 crores from MRVC for the Mumbai Suburban Railway Line construction, the execution period for which is 36 months, and at the end of Q3, the company's order book stood at 5,661 crores. The last stock is TVS Supply Chain. They have signed an MOU with Italy-based ALA Group to enter India's $28 billion aerospace and defense supply chain market. And all of these stocks have performed well in today's trading session.
Thank you very much for that. My colleague Ekta had the opportunity to speak to the management of Laurus Labs and Sai Life Sciences from the sidelines of the BioAsia Summit in Hyderabad on what they make of the weakness in the CDMO space. Listen into what they had to say and even the way forward as they see it.
The CDMO business, there will be established revenue from commercial molecules, a lot of clinical phase molecules. So the revenue coming from clinical phase molecules are very cyclical. So very difficult to quantify quarter on quarter. Even for commercial molecules, you have to see yearly numbers for CDMO companies, not quarterly numbers. Specifically, some companies are doing well, some companies are not so. It is company specific. I don't think you can attach that sentiment to the entire industry. It all depends on the offtake of the molecules, vendor diversification. If one vendor is enjoying majority market share and then a sponsor is trying to add another vendor. So it all depends on the de-risking from the partners, I would say.
The long-term drivers are better than ever, but I think the reality is the expectations are higher than ever. So I think what people are forgetting is that people are judging companies from the past from being tactical suppliers to become a strategic provider. Tactical suppliers can get one-offs, successful high-margin products, but strategic suppliers have to do a much broader range of technologies, broader range of capacities. So that actually we're in an investment cycle, and people think we're in the reaping cycle. So you have to be very careful what we wish for. I think we're the early phase of a multi-year growth cycle, but that's going to be playing out in the next 5-10 years. I don't think you can judge 1-2 years. We're just a little bit hyper because we've seen the, what do you call, biosecure XYZ. But this is a 5-10 year cycle, and I think everything is intact in terms of that cycle.
Okay, time to slip into a short break. But on the other side, Jay Bala of Cash the Kiosk is waiting for us. He'll give us his setup with regard to the markets, and we'll talk about various assets as well as stocks. Welcome back. As promised, Jay Bala joins us on the show. Hi Jay. Good afternoon. Good to see you win. Markets are creeping up gradually. Are you ruling out now that visit to, I think 1,000, 1,500 points lower from here?
Hi, Nigel. The markets are still holding up well. As long as the Nifty can hold about 25,148, the probability that we're going to see fresh all-time high first would be the case. But if 25,148 were to get printed even on an intraday basis, then we'll have to go back to the probability that the markets are going to revisit below the August low, somewhere about 24,400 to 24,000. But as long as 25,148 holds, the probability the markets are going to fresh all-time highs are higher. But it's running out of time. It needs to do it really quickly. It needs to do it really fast. And the recent low of 25,372, it's an ideal place for the Nifty to launch to fresh record highs. First 26,000, then 26,300 odds and change. But it needs to do it really fast.
Jay, IT has been in downtrend for a while now, and now the index is also at multi-month lows. Today, it's attempted a rebound. What is your read of the little bit of a recovery that we're seeing today?
Yeah, hi, Rima. I was pointing to the Nifty IT index going back below the October low once, but holding above the April low. If you go back to my notes, I've been pointing to the Nifty IT index dropping back to 33,000 and then completing the a medium to long-term move. But it's very critical. It stays about 30,900. If it doesn't hold 30,900, the thesis that I'm anticipating the markets to the Nifty IT index to bottom around the current levels, that will go out of the window. And we are probably looking at the Nifty IT index going back to 26,000 and change. So 30,900 is absolutely crucial for the Nifty IT index. It cannot afford to breach that level. So we're watching the Nifty IT index with a lot of caution, but I think it will turn bullishly. As a trader, we don't preempt the market. We want the markets to confirm that it has put in a bottom at yesterday's, the low it registered a couple of sessions ago. But 30,900 is absolutely sacrosanct.
30,000 is a level sacrosanct. What about stocks that you are recommending for trade?
Since the Nifty is at an important juncture to turn up, I'm going to go with Reliance Industries. A stop loss at about 1380 and an objective of 1550, possibly even new record highs. The second stock I have is Thermax. It's probably putting in some sort of a bottom. It's not clear if it's a short-term bottom or a medium-term bottom, but we'll take it as a short-term bottom to be conservative. Stop loss at about 2740 with an objective of 3,500 to 3,600.
Okay. All right. I want to ask you about the dollar index. The shorts on the dollar are at the highest we have seen in the last 14 years. That's the report that came in overnight from Bank of America. Given the kind of expectation with regard to these rate cuts now, there's not so much optimism. Earlier, we were expecting a lot of rate cuts. Now that seems to have dimmed down a little bit. Inflation is creeping up a little bit, and maybe the jobs market is not as weak as what is anticipated. Put that together, I think you were in the camp that believed the dollar index could actually spike up from here. You can correct me if I'm wrong.
That's right, Nigel. The dollar index broke below the October 2025 low marginally and then has come back higher. I want to see a print of a 98.25 here. If that happens, it solidifies the case. The dollar index has put in an important low because when a market breaks down and then reverses the other side, it's what we call as a false breakdown, and often the move on the opposite side will be quite sharp because of the fake move. So we are looking for a move back about 98.25, and then we can confirm the dollar index is heading at least to 103 to 104. It could be even bigger, but we are looking for confirmation to come through. This is tentative at the moment, waiting for a print of 98.25 to confirm this opinion.
Okay, all right. What about crude? It's well behaved, but I think you're calling for higher levels of there as well, right?
That's right, Nigel. I'm anticipating crude to bounce to somewhere close to 78 on NYMEX variety, and then post that we are looking for a sharp decline below $54. It registered at the end of 2025. It could even go as low as 45. But we have to stomach this volatility and higher levels in the short term. Once that's done, it will be ready for next leg down below the December 2025 lows, somewhere about 54 on change. We are looking for new lows post spikes.
Oh, very good. So Brent actually will be under pressure. That's good news from an equity perspective. Our investors asking me, tell us about silver, because Jay last time around predicted a sharp fall in silver. That happened, but where is it going from here?
Yes, we are looking for a short-term bounce to somewhere about $83. Post that, the silver is likely to hit to at least 58. So looking for lower levels on precious metals. Gold signals that the recent high it saw just above 5,100 might be an important high. I don't see much higher levels beyond 5,300, but silver is looking quite negative in the short term. But there's a reasonable probability that the medium to long term is still intact. So we'll evaluate once silver comes to about 58 and gold comes to somewhere about 4,100 to 3,800.
PSU banks are on fire. The Nifty PSU banking index should come up. That's up close to about 2.5%. Bank of Baroda, 4%. PNB, 4%. Union Bank, up and about. SBI, of course, has been the leadership stock. Jay, we were earlier chatting with Gautam Shah of Goldilocks, and he said PSU banks could be the outperformer. Did he say PSU banks or PSUs in general?
He said, yeah, that's what his call was earlier as well. He prefers PSUs that are trading in 9 to around 10 to 11 times. So that was his preference. And SBI is one of the stocks I think he spoke about in the past, at around 1,000 rupees. It's 1,200 rupees. Yeah.
Indeed. And now today, so while his call is on PSUs, today, Jay, we're seeing a big move in PSU banks. How is that space looking to you?
Yeah, so if you recall from a conversation in September, Rima, I pointed out that once SBI takes out 837, it will clean out the bags. Those are the exact words I used. And that's exactly what from 837, it's broken out and it's come to about 1214 right now. So when it comes to the banking stocks, it's a bit late. It's still the leader, but it's still a bit late to participate in the banking sector. Yes, Nifty PSU banks are looking stronger than the private sector banks. But as a sector as such, the Nifty banking index, I don't know if it has considerable upside above 63,000. We are right now at 61,100. So I'll be a little bit cautious here. I would rather start looking at underperforming banking names rather than stocks that have outperformed for the last few months. So bullish there, but still some amount of caution because 63,000 on the Nifty bank is a big resistance.
Okay, thanks for that, Jay. Appreciate you joining in. I look forward to chatting up with you soon. By the way, let's wind down the markets for you. The Nifty goes on with gains of more than 30 points. The Nifty bank was outperformer, up close to around 200 points. But the PSU banking names, that was the one that really bucked the trend in today's trading session. So good going out there. Stocks that did well, you had from the tech pack. You had Infosys, HCL Tech, and Tata Elxsi. They did pretty well. On the flip side, metal index lost its shine a little bit. So you had Hindustan Zinc, Nalco, as well as a commodity play, which is MCX. All of them did come in for some profit taking. ITC getting back to its smoking ways, and this time around, the bulls are smoking. Stock was higher in today's trading session. Adani Enterprises as well was up. What did well then from the broader markets? Paytm. Now, there's a note that's coming from Macquarie. They believe that potential could be a reason that Paytm actually sees some kind of re-rating because PhonePe is going to come out with its IPO and the valuations that they're seeking is quite high. Delivery as well did see a relief rally in trade today, so that stock did pretty well. SRF on the flip side was down. That was down close to around 3% in trade because the promoter entity looks to sell close to 3%. Swiggy as well came for profit taking, and BSC still not finding its form. That stock as well under some pressure. From the broader market, just to highlight a few big gainers that actually have been losers in the past. EasyTrip was up 20%. You had Unicommerce that was up close to around 20% as well. So big move out there. Newgen was up close to around 12% in trade, and Praj as well did pretty well in today's trading session. So from the broader markets, you had a fair bit of stocks that did a jig of their own. We'll wrap up on this edition of Closing Bell. Don't go anywhere. You come back. We're waiting for you with Markets Forward.